Welcome to Business with the Boys. I'm Dylan.
And I'm Noah. We're the boys. Now let's get down to business. So, Dylan, what is the business for today?
Yeah, so today we're going to introduce a new segment, What If the Boys? Now, in this segment, we're going to go through kind of real-world examples of questions or concerns we all might have had. We're going to cover what's trending. This week, we're going to hit on Dodge, the weekend, and a new competitor to Topgolf. But first, let's talk about what we've seen with the Fed, interest rates in the banking sector.
Okay, well, obviously, in this latest Fed meeting, we saw Jerome Powell decide to raise the rates up by 25 basis points. This was contrary to what some people were thinking. Some people were thinking that maybe because of all the trouble that we've been seeing in the banking industry lately, that he might remain flat. But he decided to actually put a little bit more pressure on the banking industry. So this has actually caused a little bit of uncertainty in the industry. So Dylan, tell us about that.
Yeah, and so like you said, many analysts and experts thought, okay, what we've seen with the banks, and especially Silicon Valley prior to that interest rate hike, thought maybe we'll pause it. And there was actually a growing percentage of people that believed, we're just going to put a pause. However, we saw that wasn't the case, and that they made it pretty clear they had a goal in mind. And Jay Powell said, we'll do what we need to get there. And so, will that continue to add pressure on the banking industry?
Only time will tell.
Yeah, exactly.
Yeah. Well, even though there is a little bit of uncertainty in the banking industry right now, there are still some reasons to keep your money in these large institutions, not necessarily Silicon Valley Bank, but other banks. So Dylan, tell us about these FDIC limits.
Yeah. And before I hit on that, you hit on it, the Silicon Valley, these regional banks, there was a lot of things there that, could have been done to prevent kind of that failure. And they were actually, the assets they had were right under a limit that allowed them to bypass further regulation. But banks that most people are in, larger banks, they all have FDIC limits. And what that means is for you as an individual, you have an account that's insured up to $250,000 by the federal government. Now, if you have a joint account with the spouse or anyone else, it's $250,000 per person.
So $500,000.
Exactly. Now, if you find yourself going over those limits at any one bank, well, it might be best, especially right now with the uncertainty that we just don't know, to go to a different bank and open another account. It's never going to hurt you to diversify amongst banks. It just, again, adds to the amount of protection you have on your cash, especially if you find yourself being over that $250,000 FDIC limit.
Exactly. Well, with what we've been seeing with all the rate hike increases, we've been seeing mortgage rates increase as well. We've actually seen rates almost triple since all-time lows in 2020, where they were trying to stimulate the market with new housing purchases. So, knowing that we've had a lot of trouble in the housing market, that leads us into our next segment. What if the boys bought a house?
Yeah, and so in this segment here, we want to look at when, as Noah mentioned, in 2020 coming out of COVID, interest rates all-time low. What if we bought a house then, what that cost us versus what if we bought it now, having seen interest rates, triple to where they were. And so we're going to walk through an example of that. So this first example here, we bought a house in 2020. Home value was $400,000. We had a 30-year fixed mortgage, and we locked in a rate at 2.75%.
Nice.
Also, we were fortunate enough to be able to put 20% down, or $80,000 in this situation, thus leaving us a monthly payment of just over $1,300. Now, if we look at what that would cost us over the lifetime of that mortgage, 30 years, we would pay $550,000 over that 30-year period. And so I'm going to turn it to you, Noah, and you're going to walk us through this same exact example, however, with the interest rates we're seeing today.
Right. Well, we're seeing very drastically different things in today's day. So in 2023, if we were to look at the same $400,000 home, looking at a common interest rate that we're seeing now, 6.4%, maybe even higher, that may be a conservative number, on a 30-year fixed mortgage, with the same down payment of $80,000, your monthly payment is looking at more like $2,000.
Right.
And that would bring your total cost over 30 years to about $800,000.
Yeah, so it's going to cost you, just north of $250,000 more for the same house, just because of where we are from an interest rate environment.
That's incredible.
Yeah. And then, and the last thing we want to do in this section is say, okay, well, I can't afford that same house, that $400,000 house, because the monthly payment is just now too much. I could afford it when it was $1,300 a month. So we want to look at, okay, if your budget is $1,300 a month, the same as it was in 2020, how much house can you afford today? And so we see our monthly payment budget of the $1,300 with what we're seeing with the 30-year fixed mortgage is 6.4%.
Right.
So that means we need a mortgage of just over $200,000. So $208,000 is the mortgage we need. We also want to assume that we were able to put down 20%. So we did the same 20%. So that means our house that we could afford, given how much we could spend on a monthly payment, is $260,000. So you see that.
Wow.
Yeah, our a house budget over these last 3 years, if we wanted to keep our payment the same, we're able to afford $130,000 less of a house than we were 3 years ago. Now, one thing to keep in mind right now is, we hear all the time, well, I'll just wait until we get back where we were in 2020. One thing to consider, where we were in 2020 from an interest rate standpoint,
It's very unrealistic.
yeah, once in a lifetime for some people of what we saw. You have to think of where we were in the middle of a pandemic, and we were just trying to stimulate the economy. So we were doing whatever necessary to get there. 6.4, when you look at the history of mortgage rates, it's still right in the norm of where we can be. Might get down to in the fours, but thinking that we're going to wait till we're at the 1.9 or 2% is really unrealistic.
It might not happen.
Yeah, exactly.
So Dylan, tell us about what's trending.
Yeah, so the first story we're going to hit on is Dodge. When I think of Dodge, I think of American muscle. However,
Cold hard steel.
That's right. That's not going to be the case for much longer. They just unveiled that they're going to produce their last gas-powered muscle car starting in 2024.
That's a huge shift for Dodge. Well, the new vehicle that he's talking about is the 2023 Challenger SRT. It's producing 1,025 horsepower from a supercharged V8 engine. It's supposed to hit 0 to 60 in 1.66 seconds.
Slap your mama fast.
That's slap your mama fast.
That's right. No, we've seen this transition from Dodge come because of the tightened regulation of their government trying to be more environmental friendly. A lot of concerns around the emissions. And so that's
right.
What has really prompted this and what we've seen across the automotive industry as a whole.
It's getting a lot of pressure from the government across the board.
Yeah, absolutely. And so if you find yourself being a diehard for this American muscle, well, it's going to come at a cost, just under $100,000. So if you're wanting to have this last of a dying breed to cruise around on the weekend, it's going to cost you.
Yeah, that's incredible. Well, speaking of The Weeknd, let's talk about The Weeknd. The artist just set a world record by the Guinness World Records of being the most popular artist in the world based on Spotify statistics. So he's actually known for popular songs such as Starboy, which he sung at the 2021 Super Bowl halftime show.
Yeah, and so when we look at what that record was, he's got 100 million, now it's north of 100 million followers, monthly followers on Spotify. And there's not even really a close second to him. He's more than 20 million ahead of second place, which happens to be Miley Cyrus. And so unless she comes in like a wrecking ball,
Hey, there you go.
She's not touching him anytime soon.
No.
And for our last story, and what's trending, we got a new competitor to Topgolf. So, Noah, tell us a little bit about that.
Yeah, so Home Run Dugout is a Texas startup, and they're meant to emulate Topgolf. They're supposed to be a direct competitor to Topgolf, and what they're bringing to the table is actually a full-service restaurant, 3 bars, 12 virtual batting cages, a mini field for wiffle ball, a concert stage, and a dog park.
Oh, nice. And so if it's always been your dream to be in the big leagues and just absolutely crush a fastball, where you're going to have the opportunity, because their fastball here is
7 miles per hour.
Yeah, so really giving you the opportunity to live out that dream. And then it's pretty reasonable too. I think it's $30 a person for a 90-minute bay. So really looking to give you the most optimal family-friendly experience in this all-American type dream.
I'm all for it. Ready for him to come to Tennessee.
Yeah, that's right.
So, Dylan, what are the takeaways for today?
Yeah, and so I think it's safe to say there's still a lot of uncertainty in the banking industry and interest rates of how far we're going to go and how quickly we're going to continue to see these rates rise. And then we've seen the direct impact that's had on the housing market just with the cost of ownership over the last few years. And so really not sure how far that will go before we start to see some more stability there. And so,
Right.
Noah, if you would just give us a recap of that last segment of what's trending.
Yeah, so what's trending right now is Dodge, the end of an era. They are stopping producing their gas-powered muscle cars. The Weeknd just hit a new record on Guinness World Records of 100 million monthly listeners on Spotify. And finally, Topgolf has a new competitor, Home Run Dugout. They've got their sights set on Topgolf, and we've got our sights set on them.
So if you liked hanging with the boys
And you love the business, like and subscribe.